Hey everyone, welcome back to Corporate Decoder. Today, Berto Acquisition Corp. The second just filed an 8K announcing the separation of units into shares and warrants, and I am seeing a move that signals potential future action. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing is all about enabling more flexible trading for investors, and it hints at the company's next steps in the market. Alright, let's dive into this. Berto Acquisition Corp, the second ticker symbol GUACU, if you are tracking it, has filed a current report. These are essentially public announcements about significant events for a company. The key date here is the 1st of July 2026. This is when the main event we're talking about happened. The company is Berto Acquisition Corp. Theken. You might know them as a special purpose acquisition company or SPAC. These companies are essentially shells created to help another business go public. They are incorporated in the Cayman Islands, which is a common practice for companies listed on US exchanges. This is their commission file number, a tracking identifier with the SEC. And this is their IRS Employer Identification number. Not the most exciting stuff, but part of the official record. Their principal executive offices are located in Las Vegas, Nevada. And a quick note on their contact number, though we will not be dwelling on these administrative details. Now, let's get to what this filing is actually about. It is detailing the company's listed securities. They have units, which are basically a package deal. These units are made up of one ordinary share and a fraction of a warrant. A warrant is like a coupon that gives you the right to buy a company's stock at a certain price in the future. The units themselves trade under the ticker GUACU, and they are listed on the Nasdaq. Then you have the ordinary shares, which are the actual ownership stakes in the company. These will trade under the symbol GUAC, and the warrants trading as GUACU allow holders to buy shares at an exercise price of $11.5. This $11.5 price is important because it sets a floor for how much the stock would need to rise for warrant holders to profit. Berto Acquisition Corp, the SEC, is identifying itself as an emerging growth company. This means they are eligible for certain regulatory accommodations, like extended periods to comply with new accounting standards. The main event discussed in this report is an announcement made on the 1st of July 2026. The company released a press statement saying that investors can now start trading the units, the ordinary shares, and the warrants separately. This separation was expected to start around the 6th of July 2026. Before this, if you bought a unit, you got all three components bundled together. Now, you can buy just the shares or just the warrants if you want. So, the units GUACU will keep trading as they are, but if you decide to break them apart, the shares will be GUAC and the warrants will be GUACU. This gives investors more flexibility. You can bet on the company's future growth by buying shares, or you can speculate on short-term price movements with warrants. An important detail here is about the warrants. You will only get whole warrants when you separate the units. No partial warrants will be issued or traded. This means if you have a unit with 1/3 of a warrant and you separate it, you will still have 1/3 of a warrant. But to trade it, it needs to be part of a whole warrant. This is a common practice to simplify trading. If you want to separate your units, you will need to work through your broker and the company's transfer agent, Continental Stock Transfer, and Trust Company. It is not an instant click for investors, there is a process involved. This section just tells us what other documents are being filed along with this report. The main exhibit here, Exhibit 99.1, is the actual press release that contains all this information. This is how the SEC requires companies to make these announcements official. So, the press release is attached for everyone to see. And there is also an interactive data file, which makes the information machine readable for financial analysis. Finally, we have the signature section. This is where the company executives officially sign off on the report, confirming that the information is accurate to the best of their knowledge. Here we see Robert Yu, President and Chief Financial Officer, signing on behalf of Berto Acquisition Corp. Theken. The date of the signature is the 1st of July 2026, matching the report date. Alright, so what does this all mean? For Berto Acquisition Corp. The SPAC, this move to allow separate trading of units, shares, and warrants is a common step for SPACs. It is designed to provide more trading flexibility for investors and can sometimes signal that the company is moving closer to a merger or acquisition, which is the ultimate goal of most SPACs. As you can see from the external news, this exact event was widely reported on the 1st of July 2026. With headlines confirming the ability for separate trading to begin around the 6th of July. This separation is a crucial step because it allows different types of investors to participate. Those who believe in the long-term prospects of the potential target company might buy shares, while those looking for more speculative shorter-term gains might focus on the warrants. The fact that the warrants have an exercise price of $11.5 means that for them to be valuable, the stock price needs to move significantly above that level. This sets a clear target for potential upside. Looking at the broader context, Berto Acquisition Corp. The GUAC had their IPO back in May 2026, raising a substantial $315.1 million. This filing about separating units indicates they are now actively managing their listed securities and are likely preparing for the next phase, which is usually finding and merging with a private operating company. The risk here, as with many SPACs, is that the company may not find a suitable merger target if they fail to do so within their allotted timeframe. The SPAC may liquidate and investors could lose a significant portion of their investment. Also, the performance of the separately traded shares and warrants will depend heavily on the quality of the target company and the market's reception of the merger. What I am actually looking for is the announcement of their definitive merger agreement. This filing is a paving stone, not the destination itself. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this breakdown helpful, please like, subscribe, and join our Discord for more discussions.